Good morning and welcome to the Killik & Co market update. This week there have been lots of headlines about retail investors taking on big hedge funds by bidding up the prices of stocks such as AMC and GameStop. AMC is a cinema chain and GameStop is a traditional video game store. Both are based in the US and both have been very much struggling recently. The shares of both companies have been heavily shorted by hedge funds who are hoping to make a profit from further share price falls. If you're shorting a stock, you'll make money if the share price falls, but you will lose money if the share price rises. Over the last few weeks, there have been various threads on social media sites such as Reddit encouraging retail investors to buy these stocks with the aim of pushing up the prices and hurting the hedge funds. Over the last week in particular, thousands of retail investors have got involved, and it's had a huge impact on the share prices. Here's the chart showing the share price of GameStop over the last 3 months. As you can see, the price was below $20 at the start of the year, and on Wednesday this week, it almost touched $350, which gave it a market cap of over $20 billion. However, on Thursday this week, a number of brokers in the US that are very popular with retail investors, for example Robinhood, these platforms were forced to suspend further purchases of GameStop. The reason being that the way these sites operate means they have to hold a certain amount of cash on their balance sheet in relation to the value of stock that they're holding for clients. On Thursday this week, some of these platforms simply didn't have enough cash to facilitate further purchases, and therefore they were forced to suspend purchases while still allowing sales, and that caused a substantial fall in the share prices of some of these companies. Again, as you can see by the chart, GameStop fell by over 40% when that happened. This story is still very much playing out, but for us there are a number of very interesting takeaways. One is the level of almost hatred that is still felt towards Wall Street and the financial sector, as you can see by reading some of these messages on Reddit. The second is the power that retail investors do have in large numbers. And the third is the question of whether or not this counts as market manipulation, and therefore whether or not social media sites such as Reddit will be subject to further regulation in future. This week, some data was released showing the different sources of electricity generation across the 27 EU member states. Here's a chart showing the data going all the way back to the year 2000. The green line shows the percentage of electricity that came from renewable sources, and the pink line shows the percentage coming from fossil fuels. As you can see, for the year 2020, for the first time, renewables accounted for a greater proportion than fossil fuels. So this really is quite an exciting turning point. On a related note, we've also noticed this week that the Financial Times now has a dedicated section for climate. As you can see by the screenshot of the website, it's literally now one of the main headlines. And for us, that just shows how important climate change is as a theme for investors at the moment. Most people expect electric vehicles to be mainstream within the not-so-distant future, but autonomous or self-driving vehicles still feel quite futuristic. However, the Law Commission in the UK, which is a statutory body set up to review and recommend reform of existing legal frameworks, is already looking at regulation for autonomous vehicles. The Law Commission published a number of proposals in December suggesting how they could consider the legal framework for autonomous vehicles. And these proposals will be consulted on up until March of this year, and they're expecting to publish final guidelines for how a legal framework could look for autonomous vehicles by the end of 2021. So that just shows that perhaps autonomous vehicles are not as far away as we think. Moving on to have a look at next week, we've got lots of companies reporting, and it's a particularly big week for US tech. We've got results out from Amazon, PayPal, and Alphabet. That's it from us. Enjoy the weekend, and we'll see you next Friday.